Hybrid funds are a class of unique mutual funds that invest in both debt and equity. The portfolio of a hybrid fund would consist of equity, debt, bonds, money market instruments, and the like. This kind of fund is an excellent option for investors who want to enter the equity markets but are risk-averse. This video covers features of hybrid funds. Why invest in hybrid funds? List of top hybrid funds. Let's start with the first point. Features of hybrid funds. Hybrid funds invest in a combination of debt and equity instruments. These funds are known for better risk management. The funds offer diversification at the discretion of the investor. Hybrid funds can be debt or equity based. A fund manager will manage your investments, percentage of exposure, buying and selling. There are largely 7 different types of hybrid funds. Equity-oriented hybrid funds, held for more than a year, will attract a 10% LTCG tax. If the fund is held for less than a year, 15% STCG tax will be applicable. Debt-oriented funds held for more than 3 years attract a 20% tax rate after accounting for indexation. If held for less than 36 months, gains are taxed as per the income slab. Why invest in hybrid funds? Hybrid funds are an excellent option for investors who want the best of both worlds, equity and debt. While equities are known for their return potential, the risk is also considerably high for this asset class. The reverse holds true for debt instruments. Hybrid funds can help investors avoid the risk of portfolio concentration of any one asset class and can help achieve a well-balanced portfolio, with equities that can provide capital appreciation and debt that can effectively mitigate risk. These funds can be customized individually, depending on the investor's risk tolerance, profile, and goals. Also, in the case of market turndowns, you are better off with investments across asset classes, where losses from one investment can be offset against the others. In that sense, hybrid funds provide a calculated blend of risk and return and are best suited for investors that wish to have returns like those from equities but are risk-averse. List of top 5 hybrid funds as of Q1 2022. Number 1. Quant Multi-Asset Fund. Launched by Quant Mutual Fund, Quant Multi-Asset Fund is a hybrid mutual fund scheme. As of Q1 2022, this fund sits on an AUM of 200 crore rupees. The 3-year rolling return of this fund was recorded at 30.69%. The fund's equity is invested in the financial, construction, consumer staples, and communication sectors. Nippon India ETF Gold BS, ITC Limited, Just Dial Limited, IRB Infrastructure Developers Limited, and Himachal Futuristic Communications Limited are the fund's top holdings. Number 2. Quant Absolute Fund. Launched by Quant Mutual Fund, Quant Absolute Fund is an aggressive hybrid mutual fund scheme. This fund has an AUM of 200 crore rupees. As of Q1 2022, the 3 years rolling return of the Quant Absolute Fund stood at 30.31%. The majority investment of this fund is in construction, consumer staples, metals, and mining industries. GOI, Vedanta Limited, ITC Limited, ICICI Bank Limited, Adani Ports, and Special Economic Zone Limited are the fund's top 5 holdings. Number 3, AXA Mid and Small Cap Equity and Debt Fund. Launched on the 20th of July 2016 by AXA Mutual Fund House, AXA Mid and Small Cap Equity and Debt Fund is an open-ended aggressive hybrid scheme. This fund has been benchmarked against the Nifty Mid Small Cap 400 Total Return Index. The asset allocation of this fund is 77% in equity, 6% in debt, and the remaining in cash and cash equivalents. Chemicals, metals and mining, materials, automobiles, and technology make up most of the fund's equity holdings. Jindal Stainless Limited, APL Apollo Tubes Limited, Minda Industries Limited, KPR Mills Limited, and Astral Polytechnic Limited are the fund's top 5 holdings. Number 4, Kotak Equity Hybrid Fund. Launched on the 11th of November 2014 by Kotak Mahindra Mutual Funds, Kotak Equity Hybrid Fund is an aggressive hybrid mutual fund scheme. As of Q1 2022, the fund had a mammoth 2,370 crore rupees in AUM. The 3-year average rolling returns stood at 20.38%. Finance, technology, materials, energy, and capital goods sectors make up the majority of the fund's stock holding. GOI, ICICI Bank Limited, Infosys Limited, HDFC Bank Limited, and State Bank of India are the fund's top 5 holdings. Number 5, ICICI Prudence Equity and Debt Fund. Launched under ICICI Prudential Mutual Fund, ICICI Prudential Equity and Debt Fund is an aggressive hybrid mutual fund scheme. The fund has a mammoth AUM of 18,714 crore rupees. Its 3-year average rolling returns stood at 19%. The minimum SIP investment for this scheme is 100 rupees. Financial, energy, communication, automobile, and technology sectors make up most of the fund's equity holdings. Bharti Airtel Limited, ICICI Bank Limited, National Thermal Power Corporation Limited, Oil and Natural Gas Con. Limited, and Hindalco Industries Limited are the fund's top 5 holdings. Conclusion: hybrid funds are those that invest in both debt and equity. For investors looking for higher returns and stable risk management, hybrid funds make an excellent option. The percentage of exposure is in mind with the investor's risk appetite and investment goals. These funds bring the best of both worlds to the investors and can help in long-term wealth creation. Before investing, do not forget to share this information to your friends. And make sure that you subscribe the Indian Stock Hunter YouTube channel.